Hello and welcome to the Bulletin with UBS on Monocle Radio. Each week the sharpest minds and freshest thinkers in finance take you beyond the numbers and hype right to the heart of the big issues of the day. This week we're talking Digital Assets 101, a series in which the Chief Investment Office of UBS Global Wealth Management explores important developments in the digital asset landscape. The first edition examined the emergence of stablecoins and applications and considered how they might challenge banks and providers of payment services. The note also looked ahead at the prospects of further product innovation and considered whether greater regulatory clarity might lead to increased demand. The author of the Digital Assets 101 piece on stablecoins is Michael Bolliger, CIO for Switzerland and Global Emerging Markets in UBS. It's a pleasure to welcome Michael back to the show. He joined my colleague Chris Chermak earlier to delve into this fascinating area. Chris began by asking Michael, what stablecoins are. Here's what he had to say.
In plain English, we can just think of stablecoins as a digital version of cash, i.e., the coins and bills you would carry around in your wallet, which is digital. And if you want to have a bit more technical, a bit more complicated, perhaps, think of them as a sort of blockchain native coin or token, which is designed with the very purpose to have a stable value against another asset. Typically, this is another currency like the US dollar or the euro or sterling, but it can also be, anything else essentially. It can be a commodity, it can be even perhaps some more exotic things.
To go into a little more depth on what stablecoins are, as opposed to crypto, I understand there's something of a bridge between crypto and regular money.
Yes and no. I think on the one hand, you're right in saying the use case for stablecoins typically is that they serve as an on-ramp and an off-ramp for people who want to move between the traditional fiat world into the crypto world, where typically cryptocurrencies like Bitcoin and Ether and other coins and tokens dominate, right? But also, remember, stablecoins can be pegged against anything else. It can be a stablecoin pegged against gold or oil. So in that sense, it wouldn't serve that purpose. They can be cryptos, technically speaking, if and when they are built on a decentralized blockchain like Ethereum or Solana. But they can also be built on private chains that, perhaps are owned and developed by large financial institutions. So in a way, they serve many different purposes and they come in very different forms and shapes.
And there are many, many hundreds of different types, as you suggest there, not unlike crypto. Are you able to zero in on a few of the sort of more distinct categories or types of stablecoin for us?
Yeah, so one dimension is to think about how they work, right? And I mentioned already, typically, I guess more than 90% of all cases are stablecoins pegged against currencies, and that's typically the US dollar, some euro projects, there's some other projects, Chinese renminbi. There's a few on commodities like gold and silver. And then there is, some that are actually backed by other cryptos. So that's already quite a bit more exotic. There's even some that rely on very complicated algorithms that make sure that, they should keep a stable value. So they're quite innovative, but they're also complicated. And then in terms of the big providers, we have essentially two major coins, USDT and USDC, the former issued by a company called Tether, the latter by a company called Circle, which sort of dominate this space for now. But as I said, we had some really important US regulation coming through as a thing called the Genius Act, which is signed into law in late July. And, I think from here going forward, this may actually further boost the launch and the adoption of stablecoins. And again, it's quite likely that we also see some of the bigger US institutions, for example, using this greater regulatory clarity now to start issuing their own projects, which again may not necessarily rely on decentralized solution, but perhaps more on proprietary private blockchains.
Well, we'll get into regulation in a little bit and the Genius Act. But before that, also curious if you could zoom out a little bit when you talk about some of those new possibilities, opportunities coming in. How is this space doing? How are stablecoins doing on market capitalization in particular? It has been rising in the past year. Crypto's been rising under Donald Trump as well. How have stablecoins been doing?
Yeah, I mean, this is one of the fastest growing areas, I'd say, in the financial industry. We're currently at around a market cap of 250 billion US dollars. So I think that's very significant. And it's also worth remembering that as recently as perhaps 3.5 years ago, this space was less than, say, 100 billion. So, as you say rightly, President Trump has made this a priority, a focus area for his administration. And to some extent, we also see that now in the reflected in the numbers in the market cap and in the prominence that this topic has globally.
And it's not necessarily just about Donald Trump. There are other things that could drive the increase in demand. Again, you did mention the regulation, but in addition to that, some developing countries are even considering or turning to stable coins when their own currencies are unreliable. Tell us about that.
Yeah, I mean, listen, from a point of view of someone who lives and works and tries to accumulate wealth in a country where typically you suffer from high inflation, you may have, a less trustworthy, reliable financial institutions, you maybe have high transaction costs, etc. Maybe for these investors, for these people, it might sound quite attractive to get access to, say, US dollar pegged stable coins as a way to, park their money and ultimately also accrue wealth, especially if on top of that, as we see now, again, more regulatory clarity, financial players start to build broader solution on the back of that regulatory progress, like, digital money market funds, digital assets funds, etc. So there is actually, I'd say, quite a significant opportunity ahead. Now, it's also worth remembering that obviously if this happens, it might have implications for other jurisdictions. We already heard, the European Union, the ECB president saying that she's concerned about the impact this might have on the monetary transmission mechanism in Europe. And we heard Chinese officials saying that they worry that, Chinese people might use this as a way to bring money out of the country. And of course, the same is true for those developing countries that you mentioned. So there is, some of these considerations that perhaps are becoming more relevant and prominent as well in the months and quarters ahead.
So there are some considerations there. And perhaps to sort of get back to regulation as well, that you mentioned the Genius Act in the United States, what is that doing for this market? There are constantly new entrants that are going to be coming in, as you also touched on. I mean, what does that mean as we're looking ahead here? What kind of new market entrants might we see?
So I think this space is currently clearly dominated by decentralized projects. I mentioned Tether, I mentioned USDC from Circle, and I think for the time being, these will remain the dominant player. But at the same time, this is in a way also a threat to incumbent players in the financial industry. So, for example, providers of payment services. And again, I think with regulatory developments, it's hard for us to see that these people just wait and let things happen. I do think it's quite likely that they will now also try to respond and, trying to defend that market or even perhaps grow that market again using the available technology in combination with the regulatory clarity in their advantage. So it's going to be, very interesting to watch these dynamics. And I think ultimately it's well possible that we see an end state for each broad, bigger currency area that sees just a very few players dominating that stablecoin market, very similar to what we see perhaps today with the big providers of payment services.
So there is a lot of potential in this. And as you say, there's regulations that are happening and there's answers to that regulation. When it comes to those answers, I suppose the question then is, how big are the risks here? Are there risks in stable coins? What kind of key vulnerabilities are there, I suppose, from an investment point of view?
Yeah, I mean, I think first of all, it's just worth reiterating that the stable coins themselves are typically not an investment. Again, think of this in plain English as the cash you have in your wallet, the physical coins, right? There's no interest and there's no protection against inflation. There's no dividends, there's no coupons, there's nothing whatsoever, right? But it's an important bridge from fiat, traditional, to digital. And it's an important gateway also to help broaden the universe of digital assets. Now, in terms of the risks, at this point, there are many. Yes, we have seen regulatory progress. The adoption and the implementation is still missing. So that means that you can run into a classical liquidity crisis. Suddenly, there is not a bank run, but a run on a digital stablecoin. And they have to liquidate their assets. They're not able to do that, and you lose your money. We had that, before. There is, of course, operational risk. There is fraud risk, especially when you work with decentralized solution. There's no, hotline you can call to help you restoring your keys or whatsoever. So that's important to keep in mind. And again, perhaps that also provides the opportunities for some of the established players to start entering that market.
When you talk about the link, the sort of entry into crypto that comes with stablecoin as being a sort of gateway to that, just tell us a little more about how you see these two developing in tandem, I suppose, stablecoins and the broader crypto market. They do in some ways tend to, you tend to see almost stablecoin rise as demand for broader crypto markets might decline. Tell us about the relationship.
I think ultimately there is one area, the crypto investors that hold crypto coins or trade crypto coins to make investment returns, they'll find that very useful. And the more liquid and also the better regulated these stablecoins are, I think the easier it is for mainstream investors to access crypto coins for, say, speculative purposes or whatever might be the case. And so in that sense, I do think the two things are actually closely correlated. More successful cryptocurrencies will ultimately increase demand for stablecoins, and better stablecoins ultimately will help to foster trading activity and investments in cryptocurrency. And then, as I said, as we discussed, on top of that, you perhaps have other sources of demand, like maybe investors from developed countries that have less confidence in their own currency. Now, what is also important is that all this, although it's clearly positive, doesn't necessarily mean that now with this progress, the regulation, we have to see cryptocurrencies necessarily rising a lot further. We've first seen quite a hype around this already, and specifically some of the coins that are linked to the build-out of stablecoins, such as Ether and Solana, rallied strongly into the run-up of President Trump signing these new regulations, the Genius Act. There's been quite a bit of a hype around that, and it wouldn't be the first time that the market ultimately says, well, I bought the rumor, now I sell the fact, because the actual adoption takes a lot longer. And then secondly, again, as I said, I do think it's also worth remembering that with the Genius Act now in place, I do think it's quite likely that we see institutional service providers, banks, etc., entering this space as well. And again, they may not rely on decentralized blockchains. They may instead work with their own in-house blockchains that is not associated with a rally in the broader crypto universe.
Well, just finally then, Michael, and sort of following on from that question, when you look at the opportunity here, you said market capitalization currently around 250 billion. What is the potential in your mind? How high could this go, or is there some kind of ceiling?
Yeah, I think that's a really tricky one to answer. I do think, this will go higher. I think that's quite likely. And then I think a lot will, again, depend on how you define stablecoin. So far, the focus is on decentralized solution. Clearly, that was a huge success in terms of the increase in market cap. Going forward, I do think there's going to be some competition from private initiatives, private solutions. And so if we add all of this together, I think it's very, very likely that we're going to see, more significant growth in this area. That I think would be my best guess.
That was Michael Bolliger, CIO for Switzerland and Global Emerging Markets in UBS, talking to Monocle's Chris Chermak earlier. And that brings us to the end of this edition of the Bulletin with UBS, setting the agenda in the fast-moving world of finance here on Monocle Radio. You can listen again and explore at monocle.com, or discover more and find out how UBS can help you at ubs.com. This is the Bulletin with UBS on Monocle Radio. I'm Tom Edwards. Thanks for listening.